Kristalina Georgieva, the managing director of the International Monetary Fund, IMF, has warned that the Federal Reserve, Fed's next interest rate hike could throw cold water on nations with high levels of dollar debt, and their recovery from the COVID-19 pandemic's economic fallout. Georgieva was speaking at an event named Global Economic Outlook at the World Economic Forum in Davos, where she stated that the Fed was acting responsibly in its response to fast-growing inflation. She said that inflation was turning into a social and economic concern in the United States, but expressed concerns about countries with dollar debt and low-income nations, claiming that such nations must act now if they wanted to avoid the repercussions of a U.S. rate hike. Many forecasters have predicted the Fed will announce its decision to raise rates sometime next week, with the rate rise itself expected to take place in March. The IMF chief praised central banks, claiming that they had prevented a Great Depression in their response last year, but stated, "We need policy flexibility this year. 2022 will be like an obstacle course." She predicted that the global recovery would continue in 2022, although she said that it high. However, the picture was different in Brazil, where Paulo Guedes, the Minister of Economy, warned that the beast of inflation is out of the bottle in the West, adding that inflation in North America and Western Europe won't be transitory. The IMF and Brazil are currently at loggerheads. Last month, Christine Lagarde, the president of the European Central Bank, ECB, speaking at the same event, hinted that the EU would look to be less aggressive in its response to inflation than the United States. She stated that the bloc was experiencing demand that is not excessive, unlike the US, adding that the EU labor market was not experiencing anything like the Great Resignation and was thus unlikely to face the same inflationary pressures as the US.